Hey guys, welcome back to our channel, and if you're new here, welcome to our channel. This is Ola from the Wolf Cartel, and in today's video I'm going to be teaching you classical chart patterns. These are basically geometrical patterns in the forex or the crypto charts that tell you what is going to happen next in the market. Is there going to be a continuation of an uptrend or a downtrend? Is there going to be a reversal from an uptrend to a downtrend or from a downtrend to an uptrend? So you just basically know what you're looking at in the market, you know what you see, and you know what next step you want to take. Be sure to like this video, subscribe to our channel, please. Share this video to your loved one and have them subscribe also. And yeah, also there's a link in the description box that takes you to our Telegram community where we always drop educational materials and also drop free forex and crypto signals every day, right? So yeah, let's get right into it. So without speaking too much English, right, I'm just going to start with the first chart pattern, which is a reversal. Usually it is a reversal chart pattern, yeah, and what this is called the head and shoulder chart pattern, right? So I'm not going to be using the chart right now. I'm just going to show you what it looks like. I'm going to be drawing out what these things look like basically, and then in subsequent videos you're going to see me use them in live trading sessions, which you can always join us. The links are always sent to the Telegram channel, right? Head and shoulder pattern usually is a reversal and is a bearish, take note of that, sorry, take note of that, a bearish reversal pattern. Now, how does this usually look in the market? You see, when you have your market looking something like this and it comes up, let's just say something like this basically, right? Then you have something like this. Yeah, this I'm going to show you. All right, yep. So we have a head and shoulder pattern here, which is a bearish reversal pattern. Shows you what's up ASAP. Okay, yes, this is going to help us out better. Now you see this. Say this is your chart. This is a tool that helps you identify your head and shoulder pattern from TradingView, right? Now this is your chart. Your market has been going in an uptrend for a while, and then it forms this left shoulder over here, then forms a head, forms a lower low, which is almost equal to this. It's almost equal to this other low here, right? And forms that, and that's your right shoulder. And then it usually comes down to this place. They call this the neckline, and then retests, and you have a bearish movement from there. Yeah, so that's the head and shoulder pattern. I'm not going to talk too much about it. Let's just say yes, double top and double bottom. Okay, so yeah, how does this look in the market? Take note, every line I draw, all these lines you see me draw like this is your candlesticks, right? These are your candlesticks, but you see this better. I just want you to be familiar with these patterns, how they look in the market, so you can be able to use it, right? So a double top usually is a bearish, a double top now is a bearish reversal pattern, right? This is how something like this, you have your market going on an uptrend for a while, and boom, it reverses here, goes back down here, comes up again, reverses again, and then you have something like this happen, right? Now here, right here, is where we had a double top, right? So top one and top two. So a double top usually occurs when market touches a particular point, reverses from there, that's at the top, goes back down to something you could also call a neckline, like around here, but then second top touches it all again, so it's a double top, right? And then a double pattern is just the exact opposite. A double bottom is exactly the opposite of this. You could have market coming in, say bearish, bearish, bearish. So this in turn is not a bearish reversal pattern, it is a bullish reversal pattern, right? So we go bearish and then it reverses from here, goes here, comes like this, and then reverses, and then boom, we have it go all the way from there. So this area right here, is where we've had our double bottom. So yeah, this is double top but double bottom. Remember, these lines are your candlesticks, yeah, these are your candlesticks. And then yeah, when you see formations like this in the market, you know what to expect. We can just put this here for you to take note of. A neckline, yeah, a neckline here too, so you call it a neckline. So once market breaks above this, usually a retest or not, and then it goes there, right? So yeah, that is that for double tops and double bottoms. So the next chart patterns we're going to be looking at is the triangles, right? The triangles. We're going to be looking at the triangles. Make this a little bit bigger. Alright, the triangles, right? Now there are three types of triangles. Basically, we have symmetrical triangle, the ascending triangle, and the descending triangle. So let's start like this. You have market, say, come like this and goes to this point here, reverses, hits here, comes back, hits here, comes a little bit like this, like this, like this, and say it just breaks out like that, right? Fine. Now there is something that has been formed here. There is a pattern there, and let me show you what that pattern is, right? Let's take our triangle tool, do this here, and yeah, let's just don't mind me here. My drawing is not the best, I know, but yeah, something of this nature, right? Now over here, what we have is an ascending triangle. Oh, sorry, my spelling for triangle is weird. Triangle. So ascending triangle, like this. Alright, we have an ascending triangle here. Now this is the formation of an ascending triangle. The top neckline over here, market tested it the first time, came down, tested it the same, almost the same point again, comes back but forms what? A higher low, goes back up again, tested it again, comes but forms a higher low, right? And then breaks out of it. Okay, and now this is an ascending triangle. Now say for example, market is coming this way, touches, say, this point, goes back up, comes back to touch that point, goes back, forms a lower high, then goes back to touch that point, forms a lower high, and then breaks out, right? We have what we call a descending triangle over here. We have a descending triangle over here, right? Once you have an ascending triangle pattern, 90% of the time it is going to come out as a bullish, it's going to form a bullish market, or it makes a results rather into a bullish market, right? 90% of the time. There's still room for that 10%, always remember that. And so that means there are confirmations you need to know over here. There's some things you need to look out for in price action over here that are going to confirm to you that okay, this is valid and I'm going to take this trade. Okay, also in descending triangle, 90% of the time it is going to result into a bearish market. 90% of the time it breaks down and not breaks out. It breaks down 90% of the time. So there are confirmations you need here to know when to enter and if to enter at all. Now that being said, we have one more, and that is your symmetrical triangle. Symmetrical triangle, yes. Now a symmetrical triangle, now on this hand, is usually something like this. When they say symmetrical, it has two equal parts. Notice the difference between this has a flat line here, this has a flat line at the top, but the symmetrical triangle is the both lines at the top, at the bottom, and at the bottom are joining at a middle point, right? Now usually a symmetrical triangle is a continuation pattern. That's how you put it. It is a continuation pattern. So say for example, market is coming from down here and it comes up. Market is coming from down here and it comes up like this, touches this point, 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 and then it's likely to go back up. This is how a symmetrical triangle works. right? This is how a symmetrical triangle works. On the other hand, say for example, yeah, I'm using green for this to represent bullish, right? Let's use green for that to represent bullish. Let's say for example the market is coming down from up here and it goes boom, 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 boom. It's likely to continue downward. Let's use red to signify that, right? Now a symmetrical triangle is a continuation pattern, right? It is a continuation pattern. Ascending triangle 90% of the time bullish result, descending triangle 90% of the time a bearish result, and the symmetrical triangle is a continuation pattern. So depending on where market is coming from, market is already in an uptrend, it forms a symmetrical triangle. 90% of the time it's going to go back and continue its uptrend. Market is coming in a downtrend, it forms a symmetric triangle. 90% chances is going to form a downtrend right after. Yeah, so that is that for the triangle. The next chart patterns, classical chart patterns we're going to be looking at right now is the flags, right? The flags. Now, how do the flags work? We have bullish flags and bearish flags. Now, this is how it works. Let me show you this. Say, for example, we're in an uptrend, right? Market is going, it's been going, and it goes all of a sudden like this, like this, like this, like this. The chances are it's going to break out this way and continue, right? Now this right here, we have a what? A bullish flag. A bullish flag has been formed right over here. This is what it looks like. It has its pole. This is the pole right here. From here to here, you have the pole, and then this is the flag being formed, and then this is a breakout to the upside. So it's called a bull flag. Let's make that happen here. This green. Alright, yeah. Now, another instance, market goes this way, and it's been forming a downtrend, and then it just goes boom, 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 boom. Sorry, my drawing is not the best. Chances are it's going to come this way and form that, right? Now, this right over here is what we call a bear flag. You'll see this better in the charts. I'm just going to show the charts because my drawing isn't necessarily the best, but yeah, boom. So now this is the pole. This is the pole of the flag. You see the pole, the flag, and then continues to go down. So a bull flag and a bear flag. Alright, now we have a bull flag and a bear flag. You get that, yeah? You get me? Yeah? And I think the last thing I just want to show you, the last chart pattern I'd like to show you is the wedge. The wedge can almost be mistaken. I want to show you because the wedge can almost be mistaken for a bull or a bear flag, right? Now, say for example, in this case, let's say instead of market looking straight, you see this flag is like this, right? Now market comes like this. See, there's a difference. There's a difference, right? It is not straight. The bull flag was straight. Now this is a wedge. Now they call it, this particular is called a falling wedge. This in particular is called the falling wedge. A falling wedge also is bullish. It's bullish by nature, right? It usually comes up in a bullish market. That's the usual thing. So this, note that every time we say, oh, this particular chart pattern is bullish or it is bearish, 90% of the time anything can happen in the market. Manipulations will come into place, fundamentals will come into place. But 95% of the time, you have these patterns show up and they do the same things. Now, the only thing you need to know to confirm is knowing some other things, indicators, using your Fibonacci or using price action. For me, it is price action. I combine all these things, but my final confirmation is price action. And yeah, that's not for this video. But yeah, those are the things I look out for. But I'm just trying to show you this is a falling wedge, and in the case of a bear market, we have what we call a rising wedge, and I'll show you what that looks like. So for example, market does this, just compresses like this, right? Now it's forming a wedge, right? The endpoint, if you drag this point, is they're going to meet at a tip here. So it means that market went in here and touched here, touched here, touched here, touched here, touched here. Chances are it comes out like this and continues its downtrend, or forms a bearish market basically. In the case of the bull market, it's coming like this, it touches here, touches here, touches here, touches here, touches here, comes out and continues in its uptrend, right? So yeah, the bull flag, bear flag are usually continuation patterns, same as the falling wedge and the rising wedge, right? Bull flag equals falling wedge, bear flag equals rising wedge. But yeah, that is basically it. Now note that when we say these patterns are being formed, or what do we have? We say, oh yeah, these patterns are being formed and things like that. You are not the one that is going to make them up in the market. The market is going to make it up. The market is going to form these things, yeah? Alright, now we're in the chart, right? I don't find much of all these patterns we just spoke about here, but I'm just going to show you example. We have here a bear flag. I want to see how it plays out. So how does bear flag form? We have a downtrend was coming into play. We had the downtrend and boom, this happened. It's like it's rising. It's rising, so it comes boom, 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 touches here, touches here. Now all this happened, I found it in the pattern and I draw my line and I know what to expect from the market. Now let me show you the pole I have here. This is the pole. From this point to this point is the pole, and usually the measured move price target for this is going to be around from here to here, which you can see the market came. Being that this is a bear flag, if you go back and look at the video, you see that this is almost the same thing. This is a bear flag. It came down, broke down this way, came like this, consolidated for a moment, but still met this target and even surpassed it, right? It met this target and surpassed it. And you know the funny thing I realized here, this target we have here is the same as a good resistance point that is coming into play right here. So that's the amazing thing about technical analysis. It just plays out in funny ways. If you're good with your analysis, you know these things very well. You see a lot of confluences coming into play, right? Now I see one here. Let me show you that. It's one of the triangle patterns we discussed, and I am seeing a symmetrical triangle. Yep, good. This is symmetrical triangle, of which seems to have even broken out, right? Let's see. I'll check these confirmations. I'll be sending the signal for this into the free Telegram group. But we have market coming from up, and we remember what we said. The symmetrical triangle is usually a continuation pattern, meaning that it is going to continue from here. Now this is this is BTC USD charts right now, so yeah, you may want to check it out. This is a bearish market going on right now. Market is falling, and then it comes up to form a symmetrical triangle, right? Touches. Now it's seeming to want to break out here, but I don't want to believe it because I'm expecting a continuation of the bear market, of which the measured move price target should be. Yeah, we're doing a little bit of analysis here. The measured move price target should be, measure it this way. I expect it to break down at this point. I mean, this is the end of it. So the measured move price target to be around 17,300 USD, right? 17,000 US times 17,300 USD. That's the expected price. So 17,400. I usually like to take profit before the target. So if I'm going to be going into a short position, which is likely, I am going to wait to see this come back here and then break out there, look at some price action indicator at my retest, and then I will know I can take this position on a short. But if the slight 5% chance of it not being a continuation pattern in this case and instead be a reversal pattern comes into play, then it should be this way, and that should be a measured move price target of 20,005. 100, but I highly doubt that right now with the condition of the market. But yeah, let's see how that goes. So yeah, I mean, we've done a little bit of analysis in this video. That's fine. I will be uploading this almost immediately after editing, right? Yeah, is there anything else? Let me just go through the chart. Let's go to the daily time frame. Okay, weekly. I need the daily. I think I'm good with daily. Yeah. Okay, am I seeing this right? Yes, I am seeing this right. Now, remember the first pattern I showed you, our head and shoulder. We have one basically right here. We have our left shoulder. We have head. We have let's go this way. Now we have a right shoulder right over here. So this is head and shoulder pattern, right? And this is the neckline from here to here, right? So now let's see what happens. We said our head and shoulder pattern is a bearish, right? It's a bearish pattern. Now usually we have the head and shoulder pattern. Now we had head, shoulder, so we're expecting a bearish move from the market, right? Now a breakdown should be retested at this neckline. We'll see what happens here. I mean, market faced a little bit of movement, a little bit of ranging rather for the meantime, and it retested, but wasn't. It was a very, very strong psychological level for BTC at the time. So it retested and was consolidating around that area, but eventually, what did it do? It became bearish. Now, usually the measured move price target for this after this has happened is from this point to this point. Yeah. So what just happened there? Okay, so from here to here, and we take this and put it around here. So usually the measured move price target is to 14k, of which we haven't even gotten to 14k. So we're still expecting, I mean, a full fulfillment of this head and shoulder, this massive head and shoulder pattern here should be to $14,500. Okay, shoulder pattern has been playing off, right? And I mean, we're at what, 17k right now. We've seen 17k, yeah, seen 18k, which is good, which shows that at least this is valid. Now there's also something called the inverse head and shoulder pattern. The inverse head and shoulder pattern. Now in that case, this would be the other way around. But if I see anything like this in the market, I will show you. Yeah, that is that for that. Do not forget, please like this video, share to your friends, subscribe to our channel for more of this content. Put your comments down below and click the link in the description to join our Telegram channel. We have over 800 subscribers right now and we are aiming for more. Please click the link in the description. I would really appreciate it. Thank you very much. Do have a nice time.